rise and markets fall like sleigh bells ringing before the call, with bulls charging like a reindeer in flight and bears hibernating on a snowy night. The angle will keep you in the fight. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Deck the halls with charts and graphs where financial wisdom reps in wreaths and laughs. In the Santa rally, watch it soar with profits climbing more and more. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the most entertaining, intellectually stimulating financial podcast in the entire world. You're watching the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Atomcash, and I'm bringing you the firepower your financial life may have been missing. Now, whether you're new to trading or a trading savant, I am to turn complexity into clarity with a shot of adrenaline. And we have a very interesting day. Yesterday was a riveting day. If you missed yesterday's show, we had a great show. We had a great day in general. And if you caught the show and you caught the angle, as we like to say, we had a fantastic trade to the upside. Rode that thing essentially till the wheels fell off. It was fantastic. It was a nice 100% gain. Had a few more 100%, or one more of a 100% gain in the Discord and another one to wrap up the day. So for all things considered, for a pretty calm day, it was actually a pretty nice day coming into this week and a great start of this month's OPEX. Big news just came out in the pre-market. What we saw was the Ukraine war looking like it may come to an end. Hold on, let me pull that up real quick. So you might have missed this. I missed this because I was running around a little bit earlier this morning. But basically, Ukraine is tentatively agreed to some terms of a peace deal. And there's still some bits of the deal outstanding, so it's not like finalized necessarily. But it's looking like we might get a peace deal with the Ukraine war, which has been going on for quite some time now. It's been a little hectic. Outside of that, we did also have PPI, which came in as expected. As you can see, the market reaction here at around 8:30 came down a little bit, but nothing too crazy. We're going to talk about the market here momentarily, but really want to highlight again our potential catalyst for the day. Today's going to actually be pretty calm. Like I said yesterday, for the whole week, it's looking like it's going to be a fairly calm week in terms of catalysts, cataly. But we have consumer confidence today at 10, so we'll keep an eye on that. We'll be live for that, so we'll watch that as it comes in. And then this was just added to the docket, everyone. Brace yourselves because the Trump turkey pardon is happening today at noon. A highlight event. So we're all going to make sure that the turkey doesn't see a shadow, because if the turkey sees its shadow, the stock market goes down 50% or something like that, I believe is the old adage. Something like that. Some sort of turkey Groundhog Day thing. I'm joking. It's not a thing. We should make it a thing, though. And then tomorrow, probably going to be more of a relaxed day in general. Today's probably the last day that big money is involved in the market in general. So we're going to watch things very closely, see how everything plays out. Now, getting into the market, we have a very interesting day ahead of us, in my opinion, mainly due to where we're sitting on the daily chart. And I talked about this ad nauseum yesterday, both on the stream, in our Discord community. But we're in a troublesome spot here. Not that it's bad, bearish, but from my risk perspective, so either a bull or a bear, it's real iffy here. As you guys know, if I put my lines on the screen, that big red line there, that has been my bull bear line. You guys know that it's 670.23. Really simple level. And if you don't like that level, here, let me show you something real quick. Let's show you something real quick. If I give you a line on a chart, you should put it on your chart. And if I say it's very important, like this, you should put it on your chart, because we tapped that to the penny. I was off by a penny. You could sue me, you could fire me, you could dislike the stream and leave. But when I give you levels like this, you want to pay very close attention because they come pretty damn close. This was a penny. Wicked it, shot back down in the pre-market. So pretty cool. That's why this level is so important. So 670.23, that's my big line in the sand here. Why is it more important today? In general, obviously we're in spitting distance without that needing to be said. But when we look in here on the daily chart, zoom in a bit closer here, and we're in a troublesome part in the sense that we're still within the price action of that Thursday down day that we saw, right? That big red candle. And now we're getting in where all the EMAs and MAs are essentially besides the 200, right? We're right where the 50 is. We're above the 8. We're above the 13. We're at the 21. We're at the 50. So we're very convoluted in here. Volume ended up being pretty good yesterday. Came into 80 million on the close, so not bad. It's a hard spot here. It's not that I want to be a bear by any means. I'd rather be a bull, and I'm still leaning bullish. I'm leaning risk off, though. So I'm a risk off bull at the moment, if that makes sense. So I'm not looking to be bearish by any means, but I'm still a risk off bull. We'll see how today goes. We're going to keep a tight eye on volatility because today, right now, we are under that 2030 spot. Put my drawings back up so you can see. Oops, what happened? Daily. Why don't I have? There they are. We're underneath that 2030 spot. You guys know, if you've been watching, that is that big line in the sand on volatility. So it makes sense that we're in a very similar spot on the SPY and on volatility at the same time. So today really could swing either way because you're in a big spot with volatility and with the market. So it really could push either way for the overall market. So we have to be a pretty nimble here on the day. Not that, again, not that it's bad. In fact, it leans more good than bad. Another thing I want to highlight to you guys is IWM's performance. Yesterday was fantastic. Completely eclipsed all price action from that Thursday candle. Now back up to that 240 spot. Looking solid, like we're going to break this daily star here. Big line in the sand for IWM. 240, 239. It's looking like our small caps are going to lead the index into the end, or lead the indexes into the end of the year. This is a lot of strength here, showing up pretty good. Now we also kept a tight eye on RSP, kind of give us that fuller picture, right? Because we know how heavy tech is, and we're going to get into that in a second. We know how heavy tech is and has been on its effect on the market, obviously, with the Mag 7 being like 30% of the whole SPY. And this is going to give us kind of an idea of how the feel is on the SPY in general, right? Your equal weight S&P 500, kind of get an idea of how things are sitting right now because we're in such a pivotal spot. Now, RSP isn't something I typically watch too often, but because of the next point I'm going to bring up to you guys, I think it's very important to keep an eye on RSP because we could start to see some level of a divergence between I don't want to say your small caps. I want to say your Mag 7, parts of your Mag 7 and the rest of the market may start to diverge. And why that sounds a little silly is because even just 3 names of the Mag 7 could have a 15% weight on the S&P 500. So it's important to take this into account is why I'm bringing that up. No better example than NVIDIA today. Bad. I gave NVIDIA the benefit of the doubt. I regret that. I gave NVIDIA the benefit of the doubt. Yesterday actually looked pretty solid near the close. So we'll go back to yesterday real quick. I'm all zoomed in. Hold on. Let's go to 5 minutes. Looked actually not bad. Whoops, that's 2 days ago. Looked not bad. Here, yes. Looked not bad into the close. During the intraday, we came up to that really, really important 183.30 level. Almost tapped it here, just missed it. Tapped it again here, came down. And then towards the end of the day, tried to make the break. Didn't necessarily get it, but we're pretty close. So I was looking, all right, maybe we can get this break in the after-hour session. Maybe gap over it tomorrow because the sentiment on the market seems pretty solid, right? A lot of the other names are pushing higher, looking better. Nope. Now, what I want to say, and it's something I've said on the program before, even though we're seeing some NVIDIA weakness here, which is now, I'm now going to move risk off on NVIDIA. You're probably coming down this 171.58. Like I said yesterday, as an investor, this is my line in the sand where I would probably put a stop on shares because getting under this, you're getting a little hairy if you already have some green here. In general, I'd lean more risk off here. It has come down. Basically, it's going to open up essentially in bear market territory for NVIDIA. It's going to be about 18% down from the highs. So you don't want to necessarily short it, but what I want to highlight to you guys, as I've said before, is the rotation within the Mag 7. So notice how NVIDIA, and again, it's not one-to-one, but NVIDIA's down 4%, and you're seeing Google up 3%. Google's been rocking and roaring. It's going to gap up again another 10 points. But you're seeing some rotation come back, even some strength come back into Meta here, up 2% in the pre-market. On other Mag 7 names, pretty flat, all things considered, right? 0.5%, whatever, so nothing like inconsequential. But we're seeing NVIDIA down substantially comparatively, and I think we're seeing some people get out of NVIDIA and rotating into potentially Google, mainly due to the fact, and even Meta a little bit, and some what I alluded to yesterday, mainly due to the fact that the market has been undervaluing Gemini, and they're now rating Gemini into Google's evaluation, because I think they didn't think much of it at a certain point. And when you're looking at a company like OpenAI, who has ChatGPT obviously, and we're speculating that their IPO eventually will be roughly around like $1 trillion market cap, which would be the biggest IPO of all time, you could argue that Google could be highly undervalued to some degree, and which is an insane statement for me. I actually recorded that. I'm going to upload that as a video. So if you missed that from yesterday's show, I'm going to upload that tomorrow. So stay tuned for that. Or today I'm going to upload it, but it's from yesterday's show, about how Google could be undervalued. And that might be what we're seeing here, is just kind of like a risk adjustment essentially on Google. Alrighty, guys. Get ready to move here. Good morning, Hatchet and Toby. Toby saying he's back and he rewatched yesterday's episode. Hell yeah, Toby. Hope you found some gems in there. HR with the AOEB. Good morning, my friend. Neegum dropping the good morning. Good morning. Nice to see you back. Eddie with the year. No more the year. Looking good. Hope you guys are doing well. It's looking like we're going to have an interesting day. We will see what happens here. For SPY, it's going to be a tricky spot today, guys. I would lean more risk off on this open, especially until we get some more information here. Like I said, PMI was kind of a nothing burger. We came in as expected. And consequently, the Ukraine war stuff added a little bit of goodness to the market today, mainly due to the fact that the dollar came down. I also have a small segment on the Ukraine war we're going to talk about now that that's back in the news. So I'll talk about like 5 things of how it could affect the stock market. So make sure you stay tuned for that. We'll probably do that around 9:50-ish, just to kind of give you guys an idea of how, when and how the war ends, how it could affect the market, what stocks keep an eye on, etc. So that's something that's on the radar for the day. But yeah, it's going to be an interesting one. We're going to have to watch SPY very closely. We're going to have to watch the VIX very closely. Yesterday was our golden setup, like I talked about. So it's everything pointing in the right direction. We had like 7 signs actually all saying up, and it proved to work great. So today is more about seeing how we react towards these pivotal levels up here. These 3, we'll call them pivot points if you want to, but these are 3 very, very important levels here, especially near term. And then another like $3 or $4 higher to actually get above that Thursday high. Which we will see. The market's lagging pretty good right now, or a little bit, right? And your Qs are showing you that weight there. So if we see weakness come through on Google, and NVIDIA still remains weak, Qs could be a target for the bears today. So you're going to want to watch that very, very closely. But we're almost time to start the day, so let's get ready to go.
It's about to open. It's time to start the day.
Alrighty, the market is now open. We're opening a little red, technically flat. I mean, technically red, but we're opening basically flat, 668.50-ish on the SPY. Getting a little pump here on the open. We're going to watch volume very closely. Again, we're under that 2030 level on the VIX, and that's a big spot to watch, because if we stay under that 2030 level, that does open the door to decay at least to 1830, even intraday. So we could have a big volatility mark down on the VIX. However, I find that very hard to happen or take place or be validated unless we get comfortably above at least here 66937. We got to get up here and slowly kind of plot our way up if that's the case. So we'll have to be very conscientious in regards to that. What are we looking at like here? IWM green on the open, looking pretty good, like we mentioned at the pre-market. That's probably where you're going to find your strength today. And RSP looking good on the open. So notice the divergence here, the difference between your SPY and your RSP. RSP looking good, your Qs moving down, and we saw a little bit of weakness on that gap on Google here. That's why I said be careful, because tech could be in the what's the word? The thing that they put on top of the guns, not hindsight, iron sight. There we go. Tech could be in the iron sight of bears today. Could be between the crosshairs, as now Google is giving back that gap. So you're going to see probably some weakness here on the tech side of things. as Nvidia holds its gap down at the moment. Microsoft trying to push up a little bit here on the open. Meta also moving lower. Apple, I wonder if Apple's going to do the same thing as we saw yesterday. Yesterday we saw Apple move up really quickly, and they just kind of go to the downside and then came up again. So we'll see if that happens once again. I mentioned yesterday how I really like, and Apple's technically getting the break today, so I'm debating if I want to chase this, but I really like the daily chart here on Apple. Let's set an alert, because this might be a day trade move here. Oops. What's more conservative? High 277. Let's set an alert at 2775. Below. So we'll keep an eye on that spot. So if we come back down to 2775 or 2775 cents, 05, might grab an Apple long. We'll see. Should realistically get back in that range before going. That would be kind of a day trade because you're getting a breakout on the daily here, which would be really solid. So there might be that opportunity to get in before it goes. Like I hesitated on yesterday. I said it would be probably a good swing position, but I didn't really pull the trigger on it. And a little bit of regret on that. But that's okay. It's always another trade. Q's pretty flat right now into the open. SPY looking like we're pushing up just a tad here. We're at that first LOI, 66937. Again, I would reiterate to be more cautious on this open than not, mainly due to where we are on the daily chart on SPY. If anything, I would lean more towards your small caps and your mid caps. However, you're getting close to that line in the sand there for IWM as well. That 242.39 is a big spot to watch also. We did break the daily SAR, so that's a really good sign here. And this price action is actually pretty phenomenal on IWM. If we can break over this 242.39 and get over that 50 MA as well, you got nothing really showing it's going to be bearish. If we can get a little bit of a cool down the next day, that would be a killer swing long in my opinion. MACD curling over, RSI moving up, broke the red SAR. Everything's like shaping up pretty nicely. You are underneath your POC, at least in this time frame. Pretty significant point there around like that 243, 244 spot. But this is looking pretty good. The only thing I don't really like from yesterday's candle is the amount of volume. Not fantastic. 36 million on the daily candle. I believe I mentioned that yesterday. It's on the lower end of what IWM typically trades. It's not abnormal, like not super low, but it's on the lower end of things. So it is something that's a little about it, but we'll keep a tight eye on it because that could be something that could be actionable today as well. All right, SPY got a nice little pump there and shot back down, leaving a little bit of a wick behind. RSP still showing a ton of strength here. So this is why I'm telling you guys, especially in this climate, to watch RSP specifically, because we're seeing a clean divergence here with the Qs, with RSP, and comparatively with IWM. Mainly due to the fact that this is happening with NVIDIA. And Google's been a little, like, there might be some give here, mainly due to you're getting a little lofty. Right, you could be bullish, but you should probably cool off a little bit here. And Microsoft's looking like doggy doo-doo. 1, 2, 3, 4, 5, 6, 7 red candles in a row. I'm still waiting for my long down here around 460, 479 to a few shekels above that, right around that low. Really, you got the 200 MA there. You could put a risk on for this LOI here and risk it for the upside, even on equity, and just ride it. Not a great look on the daily chart by any means. The weekly chart is also not looking fantastic either. Basically a double top and rejection here. You had a solid grind up here, so we got a lot of VP gap here, right? There's not a lot of price action. So there is a realm where this drops all the way down to like the 420s-ish, right? So not something I want to rush into. It might be more actionable as a day trade or opening options here to get a quick scalp and then go risk free, or with options with equity with a tighter stop. But it's something you definitely want to keep an eye on, especially if we find strength here, or we find strength in NVIDIA, or we find strength in these names that are lagging at the moment on the Mag 7 that could help the SPY overall. Because as SPY pushes into this tricky spot on the chart, it needs help. We're almost to that very, very important level here at 670.23. We are melting down so far on our volatility. We're at a VIX 20 right now, just about. VVIX is still a tad too high. I'd like this down near 100 at this point. Based on where we are in the VIX, I'd like VVIX a bit lower. It's not bad, but I would like it a little bit lower here. If I felt really ballsy, I'd take a short right now in SPY. Short for that pre-market. It's not the pre-market high, but that localized high there. It's actually to the penny, it looks like. Where's the high? Actually, it is. That is exactly to the penny right there from that little pre-market wick. But I don't really want to be short here. If I was short, I'd have to scalp that very quickly. That would be like a futures trade thing. I wouldn't want to take that on options right now. Speaking of options, let's see. All right, at the money IV is considerably lower than yesterday. Yesterday at market open, at the money IV was about 30%, which we kind of talked about how the market was pricing in a bigger move, obviously. So that's not that abnormal. Still pricing a decent amount of volatility today. Rolling 52-week IV is about 20. You're at a 24 on 0 DTE IV, so that's indicating slightly more volatile conditions. IV percentile right now is at 76%, so that means 24% of the time the stock market, at least from an options perspective, was less volatile. And HV percentile is currently sitting at 67%, which means, what is that, 33? 33% of the time the stock market was less volatile than it is today. So higher volatility conditions are still persisting on the overall market, even though volatility is going down from an option standpoint, from an equity standpoint, from an HV percentile standpoint. So both indicators are indicative of still a heightened period of volatility for the stock market as a whole. And because we're in the spot where, like I said, on the daily chart, it's a tricky spot, you may want to de-risk a little bit either way, bullish or bearish. You might want to be very careful until you have a confirmed or definitive trend. Now, one thing I did notice here as I was talking was that my UVXY was still green. And VIX has only been red from the open, down 2%, while UVXY is actually green. Why does this matter and why should you care? Well, UVXY isn't just looking at spot VIX, it's looking at spot VIX and then the next contract afterwards, theoretically. So you're getting like 45 days of exposure on volatility. The fact that this is green and this is red could be an early indication that volatility is a little stickier longer term. So spot VIX could be a little weaker and longer term VIX may be a little bit stickier. So that's something we want to keep an eye on to see if this can get on board with regular VIX and see if UVXY comes down as well, and see if those, not only the spot VIX contracts are coming down, but VIX in general coming down with those contracts, moving in line, keeping everything again in contango in general. So we're going to have to keep an eye on this just as an early indicator of that being a possibility. But outside of that, with the VVIX moving down and VIX still trending lower, it's looking like we're heading to the downside at this moment in time. On volatility to the upside of the market. Caught myself there. RSP kind of flagging at the top of the day. Getting a little high and tight here. IWM being the rock star for the indexes at the moment. Yeah, don't trust this open, guys. I wouldn't trust anything just yet. And we do have data at 10. So let's keep that on the radar as well. Be aware of that. We have consumer confidence at 10 o'clock. Market will probably be a little bit more sensitive to that as it more than it normally is, mainly due to the fact of wanting to get an idea of how strong the consumer really is. Obviously, that's why it's consumer confidence. But I think because of where we're trading on the market, that might be a little bit more pivotal than otherwise. Market coming down a bit here. NVIDIA down 5.5% in the day, really eating it. Gap down back near this LOI here at 171.58. That is like if I'm an investor, that's the point where I want to stop. It's got to bounce there. If it goes lower, I'm not feeling too good about that on the daily and on the weekly, really. Counterpoint, 4 red weeks in a row. Another counterpoint the other way. Just broke the weekly red SAR to the downside. It's not good. Look at this. This is going to be a disgusting monthly engulfing candle if NVIDIA wraps up the month like this. If NVIDIA wraps up the month like this is an old fib retracement, so I should probably get rid of that. We're getting back to at least $1.50. $150 on NVIDIA. If the month wraps like this, not ideal. We're sitting right now in let's see if it is officially a bear market on NVIDIA. About 19%. You're almost at a bear market. Basically, my LOI here, 171.58. It's probably going to be that bear market point for NVIDIA, so you're going to want to keep an eye on it. Toby says, did I mention that Google is my crush? Every time I look at her, I smile. Wow. Google, nice little bounce here and forming a nice little hammer candle on the day so far, sweeping up those lows. looking pretty good. Microsoft coming lower. Meta is trying to turn it around. I made a bull case on Meta. I don't think I uploaded that. I should upload that. I made a bull case on Meta why I like it. I don't like it at this price. I want it around 550. But it's looking like we're trying to turn the ship around. Trying to right the ship here. It's a little overstated to the downside, so it makes sense. You're bouncing on the weekly POC and off this gap fill here. Now it could back test and come lower. Again, this is a weekly time frame. Hello, cat. My cat has joined me. Here's my cat. I was mid-sentence, and you decide to jump on my lap. All right. Can I go back to work? People want to hear me say things. Go do cat things. Thank you. All right. Anyway, it's looking like Meta could turn around here, so something to keep an eye on. What it's looking like to me is that it may retest before going lower. So that's what I would be more concerned about with Meta specifically. Again, I like it for an investor standpoint around like 550. 500 to 550 is going to be my buy range on Meta. Kind of depends on price action really at that point in time. Yay caramba. NVIDIA looking like doggy doo-doo butt cheeks. Apple's still holding pretty good. Tesla's a little choppy in this range here. Watch Amazon. I mentioned this on, I think it was Friday. It wasn't yesterday, but the other day. When we get down here, I like it. I missed my long originally because my alert, you see my alert right here, 214.90s where I'm watching it very closely. And the low on this candle was 215.18, so I missed that by about 28 cents. So we're watching that for a little bit of a hold there. HR says, when you get a second, can you give your updated thoughts on CRWV still holding long equity? Sure thing. And Toby says, kitty. Yes, kitty indeed. Let's take a peek. CRWV. So I no longer have long equity. As I lined up this trade, I gave you guys the basically your risk reward here. I stopped out right here at around whatever it is, 83.07 was my stop that triggered. Because this was the risk to reward, right? So I said stop loss, I'm out. So I'm not long. However, we are tapping the 0.786 retracement right now. So take another stab here. Not awful. Let's see if there's any other level of significance here. Ooh, look at that. I like that spot. Right here. 6462. Let's watch that. So that's that high. So I don't want to call it your IPO high because it's not, but right after IPO, a few days later, that's where you topped out, right before coming all the way down to 33 bucks. So there's about a 50% retracement from there. That is a spot that interests me. Let's go back to real time. That low is 65.22, so we didn't get there yet. I'd watch that if you want to open a new long, or if you're already long, maybe risking that area. I don't hate it from a risk standpoint from there. Getting long in this range isn't awful. Risking this 6462. Or like a dollar below, whatever, giving you some breathing room there. I'll set an alert for around that 6562 area. So a few pennies above that just so I can pull it up and have time to look at it. And keep an eye on it. You could have good risk reward here. Again, if you risk like $1, just give it some breathing room. $1 to, well, this is a little more volatile. Maybe $2 to the downside here. And then if you run another, here, let's do one real quick. Let's say we got in at 6565. And again, this will just be quick and dirty. Microsoft collapsing right now. I just got an alert. We'll put it, let's say we risk $3 to the downside. And let's say we just go to the POC roughly. So that's pretty conservative, right? About $3 to the downside, so that risks you about 4% loss, 4.5% loss. 2 just a bounce to the POC up here. It gives you about 12%, so roughly about a 3% risk reward. Pretty solid. Gotta have the right entry, and with the right risk, don't hate it. This is the one thing I don't like about it. These are one of the hot momentum names that as the market has turned the boat, so as the market has started to push back to the upside, it's not getting the love, right? It's not it's not getting as much momentum to the upside. So that makes me a little trepidatious about it. It's also it's down pretty bad. Down 50% from mid-October. So you held this thing for the last month and change. You're down 57% on equity. Ay caramba. That sometimes does dig up opportunity, though. Like, I don't mind on this stock, and you guys saw, because I talked about, because obviously, HR, you're bringing it up because, obviously, I discussed it on the program. There could be another opportunity here where I open another long, and again, I'm risking $2 or $3, but the upside opportunity is great. So this is one of those names I like to play where I don't mind getting in, waiting, and then seeing where it finds another area of support before trying again for a bounce. So I don't hate this one at all. That's the other reason why I have Irene up here as well. Irene sounds like a woman's name, so I don't know if I call it Irene to just make it not sound like a woman's name randomly. But this is another one I like as well, where similar kind of story. You're beaten down, all things considered, about a 50, and I didn't draw a fib retracement. We could. Here, let's draw one. Is that all time? That's not all time low. Want to go all time low? No, it's too far. Let's do that 513. So let's do a quick fib retracement, see what this looks like. We'll do it together. Fib retracement. 513 to 76.87. 76.87. All right. Yellow dotted lines. Lock it. So yeah, I was gonna say it's roughly 50%. So there's your 50% retracement. Could come down to the GP, obviously. This is one of those like hotter names, I think, and this comparatively to we're looking at CoreWeave has not come down as much, all things considered, in the same time frame, I guess you could say. So I don't hate this one as much. Yeah, 48% from the highs to the low, so it's not as bad. And I think there's a more support for this name in general. Looking at the options chain, so I was taking a peek earlier today. Let's look at December. For December, you got an okay amount here. You have an okay amount of puts. There's a lot of bears up here at like the 50 range. I'm sorry, 55 range. You also have a lot of bulls up here because that's where it was really hot. People were trading it, right? So a lot of people were buying around this range. So there really isn't too much of heavy positioning down here. You do have a few more bulls than bears in general. And then once you get up to, like I said, this 50-ish range, you get more on both sides of things. But the bears are a little heavier. Not really. At 60, you start to pick it up a bit. So I'd have to do a little bit of a deeper dive to see if that is a better option than CoreWeave. No pun intended on the option part. But I like this one strictly from, if we're looking at just price action, I like this for that risk to reward. If we get an okay entry here, maybe like about $1 or so lower, risking about $3 downside, and then risking at least to POC, you get a 3-to-1 risk to reward, and that's solid. Sono, we entered that on the program yesterday, looking pretty good, holding up in a sea of trouble and misfortune. I did not add this on my personal portfolio. I was wrapped up in other things, so I only got this for our Seed Decree account, our small account challenge. All right, SPY rejecting. Pretty good. Let's take a peek here. Look under the hood. Oof. All right, looks like Thursday all over again. Not a day I want to touch or do anything with. I hate when the charts do this. Because this is not, if you were here for yesterday, this is not what the up day looked like. This was just, it was not the same. And consequently, the VIX obviously went up. Again, like I said, this 2030 spot was not going to be an easy spot to break. Yesterday, 2142, if I remember correctly, was pretty sticky. Let's see. We broke it, and then we kind of like roughly tapped that general area there about 3 times before coming back down, or actually coming down. So now what you want to see is if we can reject on the VIX somewhere around here and come back down a bit, meaning you get a bounce here. Wow, how close were we? 6 cents off on the LOI tap at that 664.55. Whenever there's harsh momentum like this, you want to just be very careful. It could be a bad time. Let's take a peek at NVIDIA. This is the key level. I was saying this 171.58. We broke beneath and finding some level of support here. Again, if you're an investor, this is where you need the support. I wonder if it actually just made an exact 20% drop now. Almost. 147. What's the low there? 174. Oh, wait. That is almost an exact 20% drop on NVIDIA. That would be hilarious if this bounces and just rips face from here. That it dropped almost exactly 20% from the highs. It's like just tap bear market territory just to rally. That would be insane. Google just kind of chopping along here, kind of trying to hold its gap. Microsoft to the downside tapped that LOI. Oh, I got my alert. So I was like, oh, Microsoft. Let's, how risky do I feel today? Let's see if we come back down. Things are a little heavy right now, and I don't like volatility up. So if we see this come back down a little bit, I'd look for an entry on a potential, at least a day trade here in Microsoft. Keep in mind, Microsoft contracts can be very gappy. I would look for maybe 465s. Yeah, that'll probably be the safer bet. So I'm going to keep those on my watch list for right now, and we'll see if anything comes of that. Again, keeping a tight eye on that. Basically this LOI here, that's also right around where the 200 MA is. 200 MA right now on Microsoft, currently at 465.57. So if we come back to that spot, back test it, and we show some sort of support down here, then that's where I'd be interested in the long. Right now, you're kind of like back testing the POC here. You sharply fell, getting some level of rally, especially off that LOI where the 200 MA tap is, makes sense. So if I was paying closer attention, I could have got in on a quick day trade. But rushing a day trade specifically, like if you're trying to get in and out on Microsoft, is not a fun time. IV tends to be higher, spreads tend to be wider. You're going to have a bad time if you haven't traded Microsoft before and you try to get like a quick buck. You're not going to have a good time with that. EB says, lol, go do cat things in your face. Keyboard or cat things. That's true. Keyboards are cat things. That is very, very true. Guys, if you haven't already, I didn't do my cheap plug yet, but please, in your favorite way, do me a favor and support the show. If you're enjoying the content, like it wherever you are watching on X, Twitter, YouTube, Instagram, Twitch, or Kick. I'm on 6 platforms now, I think. But do me a favor and like the stream wherever you are. Drop a comment in the chat. We always love to talk to you guys in the chat, mostly through the YouTube chat, but wherever you are, I'll see it. And most importantly, if you haven't already, pop on over to the YouTube channel. Make sure you hit the subscribe button. Once we hit 500 subscribers, this will be an everyday show. So if you enjoy the show, you want more content, all you got to do is jump over to YouTube, hit the subscribe button, maybe tell a friend or two, and you will get more of me speaking words about red and green lines to your ears every single day. Thank you in advance for your support. Sharp reversal on the SPY. Very sharp reversal. That is a $3 move in 1, 2, 3, 4, 5 minutes, which is kind of the spell with yesterday. We talked about that yesterday, how it was crazy that we were seeing a $2 to $3 move within 1 or 2 minutes. Like the market is just very, 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 very volatile at the moment, where we're getting massive swings in general. And NVIDIA, I swear, if this was the low, if this ends up being the low and it sticks, and this just rips into the end of the year, I'm going to have nothing to say about it, right? It's just going to be hilarious. It was also just beaten down harsh. That's why I said yesterday, I'm like, I can't fathom it going lower. It just doesn't seem to make sense. Sometimes the irrational things happen, though, with the market, so I don't like to play around in the realm of logic sometimes, because especially with the stock market, sometimes the stock market can remain illogical longer than you can remain solvent, and that is a lesson I've learned. Meta is actually looking pretty good. Put in a great candle here, up about 2%. Apple has not really calmed down yet. Tesla moving like the rest of the market right now. Vivek's got a little bit of a pop there, obviously. Okay, so that 2142 spot on the VIX served as, again, some level of resistance here. Looking like we're going to come back to the downside here, or mainly get trapped in between these two spots. I have to see how things cool off here momentarily. RSP still green on the day. So again, the greater S&P, right? If we're all equal weight, stocks in general are moving bullish today. It's mostly just tech being an albatross on the neck of the stock market at the moment. IWM looking pretty solid. It is volatile. We got 4 minutes until consumer confidence, guys, so just keep that in mind. I have not taken a trade today. You see that, some days I'll open 10 trades, other days I'll open 0. Right now it's a 0 kind of day, mainly because of where we're sitting on the market. Yesterday was the time to hit the gas, to hit a few trades, whatever. Things were looking clear and green, even though it's still a little bit risky, but that was the day to be clearly a bull, as I said on this program. Today, it's not that clear. So you don't want to be too risky today, in general. At least in my opinion. Meta making a new high a day. Microsoft not looking like it's coming back to me. 1, 2, 3, 4, 5, 6, 7, 8, 9 green candles in a row. Good little V bottom here on Microsoft. It needs to really break over basically the spot, the high of this big red candle here before there's any sort of continuation. I guess for simplicity's sake, you look at VWAP and look for that for a break to the upside. Meta pushing. Apple looking like it's getting ready to go. Amazon near the highs as well. I can't pull the trigger. I'm thinking about it. I'm looking at a few of these things. I'm like, could do a trade here. I can't pull the trigger. And that's something I've learned with myself, and hopefully you guys have learned this too. There's times where if you find yourself ever hesitating on a trade, you probably shouldn't make it. And it's your gut telling you, you're reading something that's not too safe. And even if you missed out on money, what I like to say is missed money is better than lost money. I'd rather miss out on a trade than lose money. That's kind of what I'm looking at here right now. We're basically back to open price on the SPY with 2 minutes into data off a heavy, basically liquidity sweep, heavy volume fall, big rebound, V bottom rebound, and we're basically back to open before a data point. I don't want to touch you. I don't want to touch you. We are going to get into the Ukraine war thing. We're going to touch on that a little bit. I thought I wanted to do something else. Don't know if I mentioned that, but we'll touch on the Ukraine war in general in a moment here once things... I was going to say things calm down, but really we're waiting just for 10 o'clock essentially to see if anything comes of that or not. Yeah. Dude, I would not be long or short right now. I mean, unless you already are and you have exposure and you're, putting stops on. Ooh, look at IWM. IWM is at that line in the sand. 242.39. We're just about there. Just about there. What a crazy open already. Interesting. All right, we're gonna keep an eye on SPY for this. I think. Logically, I mean, SPY is obviously going to reflect sentiment, but I think logically you'd see a bigger impact on IWM over SPY for consumer confidence. Could be wrong, but let's just wait and see here. VIX is near the 2030 spot as well. All right, here we go. Let's see. Consumer confidence coming in at 88.7. Forecasted was 93.3. And as I like to say, doesn't really matter. Nice little pop here on IWM. Doesn't really matter what you or I read the data as, if it's bullish or bearish. It matters how the market reacts. Because sometimes you'll look at a data point and be like, oh yeah, that's, if it's this, then it's bullish. If it's this, then it's bearish. Sometimes the market doesn't play like that. Sometimes the market does not care. Let's do that real quick. Sorry, just managing something real quick, then we'll get back into everything. Just trying to move some money around before we get into the rest of the day. There we go. That looks good. Okay. So IWM's back over that 242.39. I anticipate this to back test or at least consolidate, ideally above it before going. But this puts us in a really good spot on IWM on the weekly. Basically, on the daily. The only thing you really have in front of you here is the POC in terms of an area of resistance or support. 243.62 is that level. So we'll watch that. Again, not a great long, though. I mean, obviously you got down here, fantastic long. But getting a long from here, you're risking above a key level break to another key level of high volume, right? It's only $1. Whereas we already opened down here, there's price action down here. We could break this and come back to the downside. So it's too bullish to be bullish and too bullish to be bearish, which is a phrase I said yesterday in our community. It's something I've been saying now for ever since I started doing anything with education, with finance. That there's sometimes where things are too bullish to be bullish and too bullish to be bearish, where you don't want to necessarily be a bear because things are hot to the upside, but you also don't want to be a bull because they're hot to the upside and might need to consolidate, sit around, etc. So it's one of those spots. SPY coming back down. Oh, there's NVIDIA. Will it double bottom or will it just melt? Down 6% on what, nothing? Did we have news today? I don't think we had news, which is nuts. NVIDIA slips amid Google competition worries. I mean, that's kind of what I was alluding to, that we'd see money rotate from NVIDIA to Google, which makes sense, but Google should be up a little bit more if that was the case. Back at the lows, NVIDIA just made a new low a day. Could go lower if it doesn't find its footing. Basically, if it closes under this level today, as an investor, then I want to be out of NVIDIA, at least near term. It more than likely will drop to 150 if I'm a betting man. I will not put money on where my mouth is with that particular trade, because the last thing I want to do is really swing a short into the end of the year. It's not something I like to partake in. RSP is doing pretty okay, coming down a little bit. Very similar price action to IWM, which again makes sense. Your RSP and your IWM is kind of giving you the fuller picture of how the market sentiment actually is, even though SPY is painting a much dimmer picture. Things are actually pretty good on the market today. Scenario 2 coming out with the VIX of getting kind of pinned between these two LOIs. I don't think it would be... I find it very unlikely that we would close in this range. We're either going to close above 2142 or below 2030. I don't think it's a likely scenario that we close in the range. So we're either going to see more of a markup on volatility or we're going to see a decay. Where's my Microsoft? There we go. All right, we're getting around where I'm interested in it. So since today is Tuesday and we have a short week, you're kind of treating today's contract almost like a Thursday contract. So you want to keep that in mind if you're trading weeklies. I don't know if I want to take Mag 7 risk, is why I'm being a little bit more hesitant. At least for a day trade. I don't know if I want to take Mag 7 risk. Because clearly that's where a little bit of weakness is. But it's also where strength could come, if strength was to come, would be into the Mag 7. Man, NVIDIA, just go to hell already. Oof. I'm not going to pull the trigger. These contracts are too illiquid at the moment. They should be a little bit more liquid. What's the volume on these today? Yeah, only 492 traded. You got a 30-cent gap. I mean, that's typically how Microsoft trades, but I'd like to see a little bit more interest on these contracts, especially because they're at the money down here. Might have missed out twice. I'm not going to trade Microsoft, deciding against it. But you guys know where I would be long. Now, a swing entry down here, I don't hate, but you're kind of catching a knife, which is my concern again. And there is a scenario amidst this knife catch where there could be a deeper drawdown here for sure, especially due to this double top. So from a swing perspective even, you're really just buying and praying that the 200 MA holds on the daily. So equity with a stop would probably be the only move, and even then, I'm not really like. I would rather tie my money up elsewhere. I don't think I'm gonna get like a massive return, maybe to 500. So I'm talking. I don't even know what that is. Let's see if we got on the low here. We get to maybe the POC, 8%. What's 8% to the downside? So a 1-to-1 risk would be to risk it to that 428 area, because I said 428 was probably where it draws down lower to. So it's a 1-to-1 risk. It doesn't excite me. It doesn't make me want to have any interest in that at the moment. It's not interesting enough for me. I really, really, really hope that the market can get its legs together today in general, because I don't want to close this whole week inside this Thursday candle. Even if it comes to the downside, I don't want to close the whole week inside this Thursday candle. I want to ideally break and hold above it. But I don't want to be in here. I really don't. I don't want the market to be in here. It's going to cause very high volatile chop. We got a ton of LOIs in here. It's not going to be a fun time, in my opinion. With that being said, the market's trying to turn face, about face here. Yeah, I don't really... I'm very hesitant because I don't trust what I'm looking at right now. And I guess I have good reason to not have trust, because as I'm looking at the SPY, this gives you trust problems. Like, I don't really trust anything at the moment. Right now we're making lower highs and higher lows, so we're forming, for those of you that like sheep, some level of a pennant here, right? So we're going to get a harder break one way or the other here. I don't have confidence to tell you guys which way the break is going to come, mainly due to how volatility is sitting. Volatility is in the middle of this range, so there's an argument both ways. The Mag 7 is a mixed bag of crap right now. I don't have confidence either which way, to be honest with you. This is a very risk-off scenario for me personally, where, yeah, I could try to take stabs and make scalps and stuff, but I want to know the prevailing wind, as I like to say. I want to know which way the market more than likely is going to push. I don't want to guess. And right now I'm not confident enough to say that I feel very bullish on the day or feel very bearish. I'd rather lean bullish. I think we're going to be bullish on the day, but acknowledging how important these prices are up here gives me very limited headroom to feel bullish, right? So I'm just kind of explaining my thought process so you guys understand that this is a very risk-off environment for my personal trading style, because there's not enough confidence either which way. The upside is limited unless we get hard volume to break through very key levels on the daily and on the weekly. And to the downside, momentum isn't necessarily there. Volatility overall has been decaying. And in general, the market, look at RSP, just made a new high a day. IWM's looking healthy, right? So my sentiment drivers that I like to use, RSP and IWM, at least RSP in this current climate, are telling me that the market is feeling good, right? We're feeling bullish. So this gives you a very messy picture on SPY in terms of directionality, and it's not something I want to necessarily take a stab on or expose myself to. And in general, I want to be very careful with day trading in this climate, because this leads for a scenario where it could go, again, either which way. Tech could get heavier. IWM and RSP could get even more bullish, right? We could see more bullishness, or the inverse. Tech could see a reversal and get some bullishness, and IWM could see weakness and people flee out of small caps, or the rest of the RSP could come down. But right now, what we're seeing on the RSP specifically, especially on the daily chart, is more indicative of the beginnings of that Santa rally, the beginnings of that hard fall completely eclipsed within 2 days, and now today getting that confirmation with a decent candle so far to the upside. This doesn't scream that the market is going to collapse or go down at all. But it's really hard to be bullish on the SPY when 30% of the market, 10% alone in NVIDIA, is lagging. And the other part of it, where you're looking at Google being such a strong, I want to use the word, the cornerstone in the last 3 days for the market, has been moved up so lofty. You're up 11% in 3 days for Google. It's insane. Does this have any retracement? And if so, how will that affect the market, especially if none of that money flows into your other Mag 7 names? Very, very, very dirty, as I would like to say, read on the day. It's not a clean setup either which way. It's not a clean setup if you're a bull. It's not a clean setup if you're a bear. In fact, if anything, this climate would be more of your stock pickers kind of environment where you want to pick individual names that have some good catalysts or something like that, clear momentum, that are taking advantage of, this kind of move here on RSP and on IWM that are looking more bearish, or I'm sorry, bullish. But in general, I would be ultra cautious on the market today until at least the VIX is breaking one way or the other. You can see we're getting in tight here on the VIX in this range. SPY is just getting another lower high. Put another higher low here. We're forming that pennant out, so we'll see if we get a breakout here to the upside or the downside any moment now. Toby says, violent SPY candles today. Yeah, man, yesterday was rough too. You're moving like, you guys got to understand, put it in perspective. You're swinging like $1 to $3 within a matter of minutes here. It's not necessarily a great environment, especially, let's see if Ivy expanded or not. Ivy actually moved up on your 0 days. Excuse me. So at the money, Ivy on your 0 days actually moved up 3%. And today's volatility is so rough at the moment that your rolling 52-week Ivy actually increased by 1.17%. Ivy percentile increased to 81%. It was 70-something before. HV stayed the same. But Ivy percentile has moved up. So the options market is now pricing in an even bigger move on the market in this climate. So the options market is starting to price in even more volatile conditions than we're currently sitting in. So obviously, it doesn't take a scientist to see this, that if we're seeing a pennant form, the market is starting to price in a bigger push here one way or the other, a breakout or a breakdown in this environment. It's not something you want to have exposure to unless you're doing something like a strangle. But even then, if you're not getting enough money for it, let's see, 2, 3, strangle is going to cost you $4. So you need at least a $4 move to make any money, and that's on a 0-day strangle. So you're talking you need 672 or you need 664. So you need to break low a day or break high a day with another $2 there to make any money on a strangle. This is not, as an options trader, this is not, you're not making money today. You can, don't get me wrong, but the risk reward is not there yet. That might show up later today, but at this juncture, at 10:13 in the morning, it is not there at all. Futures traders, this is fantastic. You can play the high, the low, keep timing your highs and your lows here. You'll make plenty of money trading futures, but as an options trader, do not touch this, in my opinion. I would not touch this, and I'm not touching it. You're watching me live. I'm not doing anything. Sometimes days are like this where we kind of have to just look and analyze and kind of see, again, where the prevailing wind is, where things are looking like we're going to go, and it's not super clear. And I don't know about you, but when I spend money, I like to spend my money on things I'm pretty certain about. Whether or not they're wrong, hey, sometimes you're wrong with trading, whatever, right? But I don't want to put money on anything where I think it's going to fail, obviously. So if there's a chance of that, and I feel strongly there's a chance of failure either way, I don't really want to expose my money to that. And you're kind of seeing how we're getting even volatile in the last 4 minutes of me talking about this. The SPY has swung $1, $1.30, $1.20 in this range in the last 4 minutes, just up and down, up, down. So again, if you're scalping on futures, great. Otherwise, on options, you don't want to mess around with this. Trust me. I know some of you are very eager to trade, or you're a newer trader or whatever, but I wouldn't mess around with this in general. We're going to hop into, we'll do that, my little shtick for, whatchamacallit, the Ukraine war that I prepared for you guys. That way you at least know what to keep an eye out for when the Ukraine war officially ends. Now we got a little bit more news on that, and then we'll probably, let me just check something. So what's going to happen today, we're going to continue our stream over in the Discord. So I'm going to wrap things up here around 10:30, and then we're going to continue the stream over in our Discord community. So if you want to check that out, links in my bio for exclusive trading. Do a little bit of an extension stream over there for the members of our community. But doesn't mean we'll be leaving you guys here with nothing. We'll give you something right now. So keep the market on the screen, and we'll talk about the Ukraine war. So we just heard news that the Ukraine war could be wrapping up, and as a stock trader, I'm sure as you're watching this video right now, you may be wondering, how is that going to affect the stock market? Because at the end of the day, all I care about is the money in my portfolio, and you should care, right? So I brought up 5 key things that could be market impacts due to the Ukraine war ending. Now that we have these peace talks that are underway, we're starting to see how we can keep an eye on certain sectors of the market in general, and maybe unearth opportunities or tighten risks depending on your exposure in your portfolio. So the first thing that I have here is that energy prices theoretically would likely fall, which should ease inflation in general. So the peace agreement could stabilize global oil supply and really natural gas markets, I guess, more specifically, which should reduce geopolitical risks. As a result, lower energy prices will theoretically improve margins for transporting, manufacturing, all the things that need, obviously, energy, right? And as a result, will improve market sentiment because energy prices going down obviously help support these industries. Consequently, prices should drop as well because those savings would hopefully be passed on to the consumer, or these companies would make more money. Either way, energy prices theoretically would fall, which should have a positive effect on inflation by easing inflation. If you are a European trader, for my second point, looking specifically at European equities, so maybe you're not even a European trader, but if you're exposed to any ADRs or any companies that have a big exposure in Europe, I would watch European equities or European stocks that have either strong exposure to the stocks that have strong exposure to European markets, or stocks that are solely based in Europe in general, because they more than likely would rally. Because of this war, Europe is carrying a lot of the economic burden in general, not to mention any sort of disruption, right? If, God forbid, bombs go off or whatever happens, I don't know, I don't live in Europe, but lots of energy disruptions that could have happened during the war in general. We could have also seen more or heightened defensive spending across the board. And biggest thing of all is that uncertainty factor. And it's something I talk about quite a bit on this channel, is how the market hates uncertainty. And once uncertainty resolves itself, it's typically a bullish reaction. With war, we don't know what's going to happen. We don't know if someone does something stupid, especially in Europe when all these countries are so close together. It's not like the United States where each state is like a country. These are different countries that are right next door to each other, right? So that could cause an effect on the market in general, because if anything happens with the war, again, a misfired missile, whatever, could start a whole powder keg of other issues. So that uncertainty leaving the market will be bullish for European equities, and I would keep an eye on those stocks individually, as any of those companies. So if you took a European chocolate manufacturer and you took an American chocolate manufacturer and put them in the same realm and assume that they make the same amount of money, etc., their balance sheets are similar, that European stock, probably that one day when we actually get stronger, more confirmed reports that the war is ending, is probably going to outperform the American stock, just because of that uncertainty is leaving that risk for that specific company. Third thing to keep an eye on is your defensive stocks. They may experience a correction. So obviously when there's war, defensive stocks go up. More money is required or requested to purchase guns and tanks and missiles and everything. So as a result, defensive stocks could experience some level of a correction, obviously, due to there not being a need for them, right? We don't need more guns, more missiles, more ammunition, more rockets, whatever, because there's no war. So a resolution would theoretically lower expectations for future orders. So if we're talking about future guidance, not something you may see right away, but when we get those next conference calls for the next earnings reports, they may mention on there or guide down even due to a war ending. So there's a lower demand. If there's lower demand, they don't make as much money. So that makes a lot of logical sense. It's something to keep an eye on if you want kind of like a bearish thing to keep an eye on, or if you're long defensive stocks as a risk factor to be aware of. The fourth thing is your global risk appetite theoretically would rise. So whenever there's a major geopolitical conflict, war, whatever, ending that, so a resolution to that, is going to remove a large tail risk event in general, basically symbolizing that investors are going to rotate into riskier assets because things feel safer in general. So equities and emerging markets where maybe they wouldn't put their money otherwise, even cyclicals, because that uncertainty is falling, because they can feel more comfortable taking more risks. And as a result, they will move into these a little bit riskier assets in general. Again, uncertainty leaving the market tends to be bullish, and you should look at those riskier assets, companies that don't make any money, especially if they're European companies that don't make any money, but they have a great product that they're trying to go profitable. Those would be the kind of companies I would look at specifically for any potential additional upside on them. And lastly, your commodity market. So I'm not someone who typically trades commodities, but theoretically, and again, just working in the mindset of logic, right? Grain, fertilizer, metals, all these things would theoretically stabilize more, which should help supply chain dependent sectors. Mainly looking at, or what we know, or what I personally know about Ukraine and Russia, they export a lot of wheat, corn, like I said, fertilizer, some metals, precious metals, or in Ukraine especially. If we restore trade flows by reducing the risk of war, right, or there being no war, that would reduce theoretically volatility in the cost of a lot of these items. Consequently, that would improve profitability. So you should watch those commodity markets. If you're someone who trades commodities, that's something obviously you have an interest in. But even these companies that are adjacent. So especially if you're looking at rare earth companies, that Ukraine war ending could be actually a positive for these companies as well. So that was my 5 things to keep an eye on. If and when the Ukraine war actually ends, we got a little bit more of a firmer peace deal looking like it's coming to fruition today. But if we actually see that war end, these 5 points are what I'm personally keeping an eye on into the future. That's what I got for you guys in regards to the Ukraine war. Let me know what you think in the chat. Hedge says, bull, EU defense sector stocks should boom over the next few years. They have to spend on defense, and they're not always going to buy U.S. weapons. Bear, EU leaders have no balls. They may want to remain that way. Why would you say, curious, Hatchet, you're saying EU defense sector would go up if the Ukraine war ends? I'm curious on what your rationale is. Because theoretically, if there's less war, then there'd be lower spending on defensive goods. But maybe you're thinking about it in a different way. I haven't broached the subject and thought that way, so I'm open to change my mind. SPY getting a little bit more calm. It's nice to see that we're getting a little bit more calmer here. Yesterday we were around these LOIs were pretty important. You got this double LOI here. So you got 2 significant price points together, 66729 and 66734. So you're going to want to keep an eye on that level. I mean, today especially, it's kind of like a mid-range. Actually, let's do a quick fib retracement and see if it is a mid-range. It is. That's a 50% retracement. 66724. So that is exactly... Is that actually my LOI? 6729. So 66724, so a few pennies under that, is actually a 50% retracement from the highs to the lows. So this is really like your midpoint. So this double LOI here is really acting as the midpoint for the market today. There's not much to see here. We're just kind of bouncing around here. We didn't get a hard break either way. Technically, you're still making lower highs, and technically, you're still making higher lows. So it wouldn't be a clean pennant, but you're still forming a pennant-like price action where we're getting tighter and tighter and tighter on our price action before we get some level of a move here. The VIX is still in this range. VVIX is a little hot. It's up over 105. NVIDIA, it's still obviously bearish. You're at almost 7% down on the day. Google trying to come back up, trying to show some life. Yeah, I'm glad I didn't take that Microsoft play. I mean, I could have made money, obviously, but nothing's getting enough follow-through for me to get excited. Like, I'm looking at all these charts, or at least the Mag 7 names here. Nothing is like, ooh, this is an opportunity. I mean, you guys see it when I find something, live, and I'm like, ooh, yeah, let's go right now. Like, you can call it out. You'll see it in real time, but nothing is like that at the moment. Toby says, I always like your little roundups, if you call it that. Yeah, I should think of something called, I mean, a segment is what I've been calling them, segments, but I should call it something more, should have a cooler name than a segment. SPY is finding some support off that double LOI and that midpoint in general. So we'll see. Hatchet says Putin would love to retake Poland and the Baltic states. Baltic states are geographically vulnerable. Right, but I'm not saying... So in general, I'm not debating that. What I'm saying is I'm focusing specifically on the Ukraine war. And if the Ukraine war finds a peace deal, I'm confused on why you would think that defensive sector stocks would go up, unless you're alluding to something completely different, which is fine. I'm just saying that whole conversation was based in the realm that the war is resolved, right? We're under the assumption the war is resolved, how the market would react. I don't disagree with your sentiment here. I just disagree with the fact that you think defensive sector theoretically would go up, unless I'm misunderstanding your interpretation. RSP looking pretty good. We're near the high of day and looking like we're about to break and push higher, breaking the red SAR on the day. And IWM back near that 242.39. I wish there was a little bit more upside on our IWM. I might pick up some IWM calls. I might do a 0 but go in the money a little bit just to hedge risk a tad. Yeah. Let's do that. I'm going to look at the 242s here. I'm going to slowly start to scale in on the 242s. I'm going to add a few more here. Basically, any north of like 85 I'm happy with. Right now I've been buying a lot of 88s. Wait another second or two. All right, let's rock that. Today, 242 calls at 88 cents. Let's see where that brings us. Let's see. High a day on this contract was $1.34. Lows were about 40 cents or so. So we'll see. Obviously, this LOI here is what I'm watching here as a break and go kind of thing. You're forming a little bit of a downtrend here. If I can. It's not perfect, don't sue me. Forming a little bit of a downtrend there where we could break to the upside here on IWM. Nice. Got a little bit of a break here. We're at the LOI. Sorry, it's an enter text message. So I'm going to trim some out here on that LOI tab right here. It's 19%. Let's see if we get some follow through here. So we broke the downtrend here on IWM. We found support at the POC, left a few wicks there before breaking higher. Broke the red SAR to the upside. MACD flip, good momentum. This is a really solid like day trade setup. Everything lines like checks my boxes here. So I'm just looking for a continuation because that's all that really matters here. I'm gonna trim a few more here for 29% gain. Spell, there we go. Next price target I'm looking at for is high a day here. Well, look at this high. I feel a little more comfortable because I'm at the money, or I'm in the money already on these contracts, so I can obviously take a little bit more risk, but that was part of my strategy here to go in the money, to deleverage the risk and not go out the money, because I typically like to go, especially on a 0 day, I like to go at least like one strike out the money, but I'm trying to be a little cautious with a 0 day. Crazy, I know. We're near this secondary high here. So I'm going to take another trim here, and then I'll plan runner size at the high a day. 39%. I would also add a stop loss here at break even in case it sours on you real quick. So now you're clear in the green. You made some sort of money on this, right? You got a stop loss at break even. So worst case scenario, you make or lose no additional money. And now what I'm risking here again is the high a day, ideally a break for me to go runner size. I want to see some volume break. If I just tap it, I'll have to be ready to pull the cord there too, at least to go runners. Now, if you ever watch me trade or whatever, when I go runners, it's typically like the meat of the trade. I'm like happy with that. 80%, 90% of my money is off the table already, right? Most of my money is no longer being traded. I have a very small amount left over comparative to my size, right? If you can't afford the privilege of going runner size, you can also always move a stop up with you or just realize profit. You're at a 40% gain right now. That's crazy. You made a 40% gain in a few minutes. You got nothing to scoff at. Let's see if these will go a little hot, a little hotter, a little higher here. Wait a second. I want to see if we can get a little bit more. Okay, there we go. New high in the contracts. All right, I'll trim them out. Won't get too excited. It's 52% gain. Keep that stop loss on. Ride the rest for the rest of the day, essentially. You're in the money. Have fun. Can I get some cows in the chat? Drop a cow in the chat if you made some money. So realistic, where I trim half my runner size in this scenario. I mean, runners here for sure. You with the 50 MA on the daily. So if you're in a small account, you even realize the gains completely, in my opinion. If we can appreciate another, it sounds nutty, but it could happen. 244.35. That's your POC tap. You got a lot of volume up here though too. But especially if the market turns face, like if the market moves up, the VIX broke under that 2030. So if things, I know it seems crazy, but if the volatility moves down more and the market can find its footing, IWM is going to continue to rocket. You're already in the strong sector. Like it will just continue to push and push and push. And this could really be a monster. So if you can afford it, definitely keep, even if it's just one contract on with stop loss at break even, you move that up. Because the opportunity to catch that bigger fish, as I like to say, is here. It's risky. Like right here, literally 242.86 right here is the 50 MA on the daily. So breaking above this, you're kind of clear to go for another $2, $1.50 to the upside if the market supports the move. I said drop some cows in the chat, not some moos in the chat. Got some cow emojis out there. I'm happy I could fire off a trade for you guys at least. I'm happy we found one thing I felt pretty confident on, pretty comfortable with. And you guys see, like, quick lesson, and then we're going to go and we're going to continue the stream over in the Discord. So if you want to check that out, again, links in my bio. There are times where I will sit here and not do anything for hours, but when I make the trade, it's a trade that I'm very patient, and it's the trade I want to take. And there's other times where I'm hitting the gas and we're going hard, right? We're going because it's a time you make money when the sun's shining kind of thing, right? You make hay when the sun's shining, whatever the phrase is. Similar scenario to this, where today you saw me look at a bunch of charts, consider a bunch of trades, consider a bunch of things, and nothing was really like striking my eye, or like nothing was interesting. Nothing looked like it had great potential. Nothing looked calm enough from a volatility standpoint where I could still make money on it. Nothing was clean enough, right? But waiting long enough for very, very technical setup like this, where I found on IWM the strongest sector of the day, right? Buying the strength, buying the cool down, a bull flag if you want to call it that, buying the cool down at a key point. And you can ask for more. You really could. That's what you want to do. Especially on days like today, you want to really be very, very picky. I would rather take 4 trades this week, 5 trades this week, and make money on all of them than take 15 trades and make money on like 30% or 60% of them and take 30% losses. Obviously, you limit your losses, etc. But I'd rather take more high confidence trades than fewer lower confidence trades, just because I want to trade, you know? All right, guys, that's probably going to wrap it up. Like I said, we're going to continue this over in the Discord. So if you're in the Discord community, I'm going to get that set up. It'll probably be like a minute lag between when I am ending this stream and when we do that. I might do another stream tomorrow for you guys here on YouTube and all the other platforms. I don't know, mainly because we'll see how pre-market is. And this just goes for the rest of the week, guys. Typically, your like institutional money, bigger money, volume tends to dry up, like, if I'm being generous, tomorrow mid-morning, right? Like 10, 11. It's a lot of like retail trading between Wednesday to Friday, because Friday's a half day, right? And market's closed Thursday. We could even start to see that today. I don't think we're going to see that today, mainly because of how we're moving already, how volatile things are, and we're seeing pretty good volume. So I don't think today's we're going to see an early move there. Wow, keep going IWM. But obviously a possibility. So if things are looking boring, I'm not going to stream tomorrow. If things are looking like we could make a few trades, things look pretty good, I'll trade tomorrow. It'll be a good time. Maybe I'll stick around for one more second. Should I at least get a bag? Should we get a bag here, guys? Should we get a nice 100% trade? Would you guys like that? Let's see. What's the math? That would be 176. Can we get over 176 a contract? Can we do it? Let's see. Let's see if we can drop a bag before we go. A nice 100% gainer on stream. I don't know. This good break here. Good bar. Good volume. 5 minutes pretty solid. Let's see. I just need a nice quick pop. I parked an order or two. Let's see what happens. Let's see. Patiently waiting. Spy's in this tricky spot again, guys. And again, like I like to give you guys kind of like a game plan for the day. This 670.23 is so important on the day. This whole area is going to be a rough spot for the bulls. And even above this is a very turbulent spot. All the way to that Thursday high. I exercise a lot of caution in that whole range. Anything here or higher on the SPY, I would exercise a lot of caution as a bull in general. And again, it's not me being bearish. It's just could get shot down and we could fly and then just get shot. Like that makes it sketchy is what I want to say. It's sketchy. Corresponding with that, I guess I should make this line a little bit bigger. This is a key level on the Qs, 601.65. Above this, things push pretty bullish on the Qs. So if the Qs can hold it together above this, that would theoretically support the narrative that SPY can continue to rally to the upside. Because, again, the weaker part of the market today is your tech, right? So if tech can stay relatively bullish and IWM still pushing bullish, RSP overall is a monster, still stays bullish. Man, I never thought I'd see the day RSP is just outperforming the Qs. If we start seeing sentiment stay like this in general and stay like this on IWM and the Qs are at least somewhat participating, then it's possible the SPY could find its footing and keep going. And this is really, the Qs are really going to be drugged down by NVIDIA unless NVIDIA gets some sort of news or something that saves its ass at this point. It's not looking great. Not looking great at all. And then the big spot to watch again on volatility is at 2030, which we're near the low day right now is 2003. We're at 2012 right now on the VIX. So you're kind of at a double bottom spot there. And again, if we break below that, you're going to want to keep an eye until 1830. Big spot to watch on the VIX. So like I said, the opportunity there is we could push into decay. But again, depends on all of these factors working together. So I kind of try to give you guys all of the puzzle pieces to put together the puzzle. It's kind of a wait and see thing if that would actually come to fruition. I'm really waiting to see if I can at least get 100% on the IWM so I can drop my seal dabbing. People in the Discord know about the seal dab. I think I've successfully hooked it up to the stream where it should work. So I would love to play the seal dab. But I promised we'd hold the seal dab hostage until we got 100% gain at least. So we can't do it unless we see bags. And so far this week has been a very good week for me, mainly because I'm taking it very slow. And in general, the holiday weeks are leading up into a holiday tend to be pretty positive, tend to be more bullish than bearish. Tend to be isn't always the case though, right? It's looking like Knock on wood, things are going to go that way. Come on, IWM. I'm literally just filibustering so I can see if IWM can get this push. Can we get it? Just give me one solid pump so we can hit I should get a soundbite too. What do we have? Nukes. Wow. I got the year. We can always hit the year. About 5-minute consolidation up here on IWM. If it's going to go again, it's going to go like right now. Next like 1 to 2 minutes. If it's going to try, it's going to try now. Look at RSP. Maybe I should have backed this this beast. What a monster. 1% on RSP is big, guys. Just so you understand. Like that. Look at these candles. A 1% day on RSP is massive. For context, just so you understand, this big red day that we saw on RSP, like for the whole market last Thursday, it was a negative 1.22% day. Okay? The current candle is a 1.09% day. Green. So we're almost to the same percentage change as that Thursday candle, believe it or not. Crazy, right? Crazy, crazy. All right, well, I guess I'm going to wrap it up because the stock market likes to do this thing where it waits till I'm done and I leave and then the things happen that want to happen. So we're going to wrap it up, guys. Like I said, I might be live tomorrow, so make sure you stick around. I'll put the announcement out on my X if I end up going live. You'll know. Same thing with the Discord. If I end up going live, you'll know. But with that being said, guys, I'm really trying to buy my time here. Come on. We're at 106. We're at 162. I need 176. Can we get a break here? I don't think I can filibuster anymore. I really don't. I'm trying. Come on. Break. Hard push. One hard push. This is the last 1 minute candle I'm going to give it. This is it. If I don't get on this, I'm actually wrapping it up. I will actually wrap it up. It is this candle that we get it or it doesn't happen on the stream. No exceptions. You've got 42 seconds, IWM. Make your choice. You need to appreciate another 11 cents on my contracts. Actually, let's just look at the contracts. Let's just see. It'd be more exciting if we just see the... Woo! Someone dropping, what is that? $100,000 there on these on the 0 days. 1,742 contracts at 165. That ain't me. No siree. Oh, 170 on the ask. Need 6 more cents. There's 170 filled. 171. Can we do it? 174 on the ask. 175 on the ask. Can we just call that a win? Can we call that 100%? Can we? Can we please? We're right there. 175 on the ask. Come on. Guys, we need a little hype in the chat. We need some cows or something. We need to push this a few pennies here. Let's go. I get a fill? Yes. I got a partial fill for a 102% gain. Let's go. Oh, baby. That is what I was waiting for. Gotta love it. I'll spy. Ooh. All right, guys. I have to move this over to the Discord because I promised I would do it for them. I'm sorry to cut you guys off at the knees here, but I promised. Oh, my goodness. You guys are going to miss out on so much good stuff. Make sure you join the Discord. I'm going to trim one more time on these contracts before I go. That is a 120% gain on those contracts. I'm just going to sit in the other. I'm now half my runner size. I'm going to sit in the rest. We'll see what happens. Hope you guys have a good rest of your day. You know what to look out for on everything. I hope you're going to do well. If you're in the Discord, I'll see you in literally like a minute. Some will say you need an extra trade. Well, I like to look at things from a different angle. That's always you'll get right here on the Atomcash angle. Guys, I hope you have a great rest of your day. And remember, precision beats prediction every damn time. I will see you maybe tomorrow. If I don't, have a happy Thanksgiving. Spend some time with your loved ones if you can. And if not, I will see you when we're into the Christmas season next time.
The time has passed, and that's a wrap.